Silicon Valley Bank, the fall of a banking giant. Silicon Valley Bank's corporate headquarters in Santa Clara, California. In the early 2000s, Silicon Valley Bank was one of the fastest-growing banks in the United States. Its innovative approach to banking had made it the go-to lender for tech startups across the country. But behind the scenes, cracks were beginning to form. The bank's lending practices were becoming increasingly risky, and its executives were ignoring warning signs that the financial crisis of 2008 was looming on the horizon. Meeting of the bank's executives, where they are discussing the latest quarterly earnings report. Our numbers are looking good, but we need to keep pushing for even more growth. Agreed. We need to keep lending to these startups, even if their financials aren't perfect. We can't let our competitors steal our business. As the housing market began to collapse and the global financial system teetered on the brink of collapse, Silicon Valley Bank's lending practices came under scrutiny. It soon became clear that the bank had been extending credit to companies that had no hope of paying it back. Financial analysts discussing the bank's troubles. Silicon Valley Bank's reckless lending practices have put it in a precarious position. If it doesn't clean up its act soon, it could be the next bank to fail. Panicked customers withdrawing their money from the bank. As the crisis deepened, Silicon Valley Bank was forced to take drastic measures. It laid off thousands of employees, sold off assets, and begged the government for a bailout. But it was too little, too late. In 2009, the bank filed for bankruptcy. Now empty Silicon Valley Bank headquarters. The fall of Silicon Valley Bank was a stark reminder of the dangers of unchecked greed and risk-taking in the financial industry. But it also served as a cautionary tale for future generations, a warning that the pursuit of profit at all costs can have devastating consequences. Fade to black.